Erik Peterson on Williston Trending Topics News Radio Live.
Welcome, Williston Trending Topics News Radio Live, Coyote Radio 98.5 FM. Erik Peterson with us every Tuesday morning in the 8 o'clock hour to talk real estate. Today we talk financing and loans, something you got to have unless you got a lot of pocket change. Erik, good to have you with us.
Yes, thanks again for having me, and really excited to talk about financing and loans and how people can go about and go get credit and use other people's money to secure a house.
Is it that easy?
Not as easy as it used to be, that's for sure. Especially now when you throw into the mix COVID. A lot of people got laid off 2 years ago during COVID, or maybe had their job cut or their hours reduced. So now these banks are now starting to look at 2 years of your tax records and job history. And now people are coming up to the point where they can now afford to qualify.
Well, that's good news that they're able to qualify. But as they qualify, they have to look at different options, especially with interest rates going up and down and moving all around.
Yep.
So talk about those different options that a family has.
Yeah, that's really a great question. There's 7 different types of loans that you can qualify for. We're going to talk about the ones that are the most important, that most people in our, network and our listening audience could take advantage of. And really it comes down to what your credit is. We've mentioned it several times on this show. What is your credit score? What's your debt to income? What other debts do you have? Do you have any other kind of foreclosures or liens or encumbrances or judgments on your record? Those are all the things that'll keep you from getting a house. The sooner that you get your credit up, the more chance that you're going to have to qualify for the loan, and then determine which one of those loans is the best. So several different types of loans. We're going to talk mostly about your conventional loan. That's going to be a minimum credit score of 620 or above traditionally. You also want to take advantage of a lower payment with a conventional loan versus an FHA loan. Sometimes you can have as little as 3% down on a conventional loan, but oftentimes it's between 10 and 20%. And then really the cons with that is because you have to have that minimum of 620 of a credit score. A lot of people can't do that, or they don't have the money down to contribute to their closing costs.
So when you have a low credit score in the sixes, 650 or 660.
Yep.
You have to compensate that with more cash down?
Yeah, traditionally, and it depends obviously on the situation, how much you're looking to loan on and who the lender is. The more credit you have, then the less money you traditionally have to put down. FHA is the second type of loan that a lot of people can qualify for as well. FHA requires 3.5% down. And what we've done with those people that don't have the money to put down, or maybe don't have the credit to qualify, we've set them up in a lot of situations where the seller will pay some of their closing costs as well to help out with that down payment. So yeah, it works out great. Let's say your house is listed at $300,000 and somebody wants to make an offer at $300,000. If you do a seller paid closing cost, that person would now offer $305,000, let's say. The seller would take that $5,000 above what they were originally hoping to get out of it. They will then credit back that $5,000 for the closing cost for the buyer to help them qualify. It's essentially like the seller's taking money out of one pocket, loaning it in a short-term situation to the buyer, and that just means that the buyer would need less money to come down with.
And the lender doesn't mind that happening, huh?
Yeah, I mean, it just depends. You've got to disclose it. Everybody has to be on the same page. There's certain forms to fill out. It depends on who the lender is, who the creditor is, etc. But it's really a great way to get somebody in there that has not had the ability to save up. And then you also have to come up with your other closing costs. Your title work. Are you getting any kind of insurance, title insurance? Are you getting just those normal closing costs as well that can be built into the loan?
Even if you have great credit,
yep,
isn't it wise to put as much down as you can possibly put down, or not?
Yeah, it just depends. My theory has always been, let's try to use the bank's money as much as possible to then get the best interest rate. And once you secure and you lock into that interest rate, put as little money down as possible so that you have some more money available for other types of things. Rainy day, maybe you want to buy a rental home, maybe you want to need a new vehicle, or maybe your darn hot water heater went out like we talked about last week, right? Your home appliances and that type of situation. So What I typically tend to do is tell people to put down as little money as they can to then create a payment that's affordable for them, and then save that money for rainy days and emergency funds.
Erik Peterson with us, Proven Realty, with us every Tuesday morning at 8 o'clock. We talk real estate. Today we're talking financing. How important is it that you get a real estate agent that's used to working with local lenders?
Yeah, I would say it's really essential. You really need a local real estate agent. If you're not licensed in North Dakota, you can't do business in our state, but you can certainly find your lender outside of state. So just like it's important to have a lender that's local that you can go in there and talk to, it's equally as important having a real estate agent that's there that could go meet with the bank, show up for inspections, show up for meetings, go to the closing with you to answer all those questions. You want somebody that's local, somebody that's experienced, and somebody that can help you get the best results.
And let's say that I've decided I'm going to wait a while. I'm not going to go because of the topsy-turvy climate that we have right now. I'm going to wait a year and a half to go ahead and make my purchase. What should I be doing during that time to prepare for the lend?
Yeah, absolutely. Saving money and having more money to put down for your down payment is important. Obviously, paying off any past debts, liens, things that show up on your credit, helping to consolidate debt, that's going to be important as well. And then as much money as you can to put down will do two things. It will lower the interest rate that you're going to pay and obviously your monthly payment. But once you get above 20% equity, you can forego the insurance, the principal and insurance that you have once you're over that 20% to help save money monthly.
That's a big nut to crack, that insurance, right?
Yeah, it sure is. It's a lot of money, usually a couple $100 depending on your loan, obviously. But if you don't have that, that's money that could just go right to the principal or in your rainy day savings account.
All right, I know that you're not going to tell us what lenders to go to, but does it make a difference whether I go to a bank or a mortgage company?
Yes, it absolutely does. And here's the question we always ask is, will they hold that money in-house or will they sell your loan to the street, to a national buyer? If you go to a local lender that keeps their loans in-house, they don't have to be fitting into the same box that some of these other places do. You can get qualified a little easier there. And specifically, they're a lot more aggressive on their rates. We just had somebody save a 1% on their interest rate by shopping local. So go local, go to a credit union, check around. There's some phenomenal local lenders here that are willing to fight for you, to go to bat for you, and to make sure that you get underwritten at the best rate. And then it's also important to talk to your individual loan officer to find out what type of loan. Are you going to get a adjustable rate mortgage? We've been hearing a lot more of those. Are you going to go fixed? Do you want to go a 15-year mortgage versus a 30-year fixed? Can you buy down points? There's so many of these nuances, Tom, that are really important to talk to your local expert to see which box is the best one for you to fit in based on your individual situation and also what your family needs as well.
This selling of the loan to other vendors, so to speak, that's really a difficult thing to get involved in. How do you stay away from that? Do you have any control, any way of controlling that at the front end?
No, you don't have control. They'll give you disclosures and say they're going to sell it. You have to fill out documentation that allows them to sell your loan to the street. But ask the lender when you sit down with them, will you sell this loan? Who's going to be servicing the loan? Right? I used to have a loan company that sold me 5 times, and it's hard to remember to set up your automatic payments. What happens if you miss a payment? What happens if you're having trouble logging in? Go find a lender that keeps your loan in-house, and that's typically the place that you can get the best interest rate on.
Loans and financing in real estate. We're talking with Erik Peterson from Proven Realty. Anything else today, Erik?
No, that's it. I would say if you're even considering buying a house, go get your powder dry, talk to a lender, talk to somebody that's local, get all of your affairs and orders, get the pre-approval. That way, if something comes up, you can jump right on that house. You're never going to know when the perfect house in your dream home hits your lap. We've had 3 of our agents do it in the last year, and it's fun to be a part of. And certainly anybody can do it as long as you work hard and have a good credit.
Tell them how to find you.
You can find me at provenrealtynd.com.
All right. Thank you, Erik. We'll see you next week.
Thanks
Erik,
again. I appreciate your time. Have a good day and stay warm.
Erik Peterson with us every Tuesday morning at 8 o'clock. We'll see you soon.